Okay, this video is by Mark Douglas. It's about 50 minutes long, but I mean it should fit right into our time cap here. But this video helped me out a lot as far as maybe your trading journey is right where it should be. You just need to make one tweak, right? That one thing to put you over. So we'll watch the video. We'll come back. We'll talk about it and see if you guys get some benefit. Please take notes.
To get to that ideal mindset right here, okay? And what am I? And even when I say consistency, what am I talking about? Am I talking about never having a loss again? What? No, I'm not talking about never having a loss again. But I am talking about an equity curve that basically, that you get this nice gentle rise, or even, let's put it this way, a nice slope on an equity curve that doesn't reflect trading errors. We're going to have losses, but that's a lot different than an equity curve that looks something like this. Okay, and then you work on it a little bit more, and you got one of these again. These kinds of huge dips or drop-offs in our equity curve are always going to be the result of trading errors of one type or another. I know it's very easy to say, no, it was the market conditions that did this to me. But if you investigate these situations much closer, you're going to find that they're always going to be the result of a trading error of some sort. If we just eliminated our trading errors from our trading, probably with the kind of experience levels that exist in this group. And what I mean by experience levels are just, your ability to read the markets, your ability to identify an edge. I would bet that if you went back and really, truly scrutinized your trades and eliminated, or had a way of at least having, let's say, having the kind of diary or information about your trades where you could go back and say, you know what, if I didn't make this error, this error, this error, and this error, instead of my equity curve looking like this, it would look like that. Now, there is an ideal mindset to create this. This is the blueprint I'm going to give you. I'm going to give you a blueprint for that ideal mindset. But we're talking about, the problem here is that we're talking about psychology. We're talking about mental makeup. These are not things that we typically grow up learning how to work with. We don't go through grade school getting psychology courses. We don't even really get, probably good psychology. Maybe today the kids in high school might. I don't really know. I didn't in high school. And I don't even think the psychology courses in many colleges are probably that good, because they're perpetuating what people did 100 years ago instead of really, in many cases, being creative and finding things that really work today. So since we're talking about our mental makeup, we're going to have to learn some skills. We're going to have to learn skills to bridge, let's say, this gap between, let's see, where someone might be here and this distance to this psychological, let's say, this is the psychological distance to this particular mindset that they're trying to acquire. In essence, they're saying, I need to reinvent myself in some ways. Now, what does that distance mean? Well, it's very abstract. There's really no way to say that it has anything to do with linear inches or centimeters or whatever. It's more, I would say it's more like software code. It would be saying, like, if I had a software program that was consisted of 1 million lines of code, and that code was virtually perfect, except that it had one period out of place in one line, and that particular software program ran perfectly under virtually all circumstances except one particular circumstance in which that one period that's out of place caused the whole thing to shut down and cause a catastrophic shutdown. Okay. Now you could say if you want to equate this to psychological distance, you could say that what's the distance between let's say where that person's at and the ideal or most perfect mindset? Just one period away, right? The problem is finding that particular line, so, and knowing how to fix the error. It would be, there's another analogy where that I read many years ago. I don't remember what book it was in, but you know, there was something wrong with the plumbing in a hospital. Okay, and so they called the hospital called the plumber, and the plumber went down to the basement of the hospital, and he was looking at virtually acres of pipes. And and he's walking, he's turning the bottom of the, of the hospital, and he's looking around, and he takes out his wrench from his belt, and he starts, tapping on a valve here and tapping on a valve there. And, and he thinks about it a little bit, and then all of a sudden he takes this one valve and he just gives it a whack, and everything runs perfectly. So he went back, sent the hospital a bill, and he sent him a bill for $1,000. And the hospital administrator called him up and said, "Hey, what's going on? You're only down here for a half an hour, and I saw you. You took a wrench out of your belt, and you wrapped, you whacked this one valve, and everything ran perfectly. I mean, come on, $1,000." He said, "Okay, I'll revise the bill." So he sent him a revised bill. Yeah, no. $10 for whacking the valve, $990 for knowing where to whack. Okay, what we're dealing with here is a lot like that. There could be a person in this room, and I know Jake's hoping he's that person, but there could be a person in this room who's only one period away, just one flaw away from that ideal mindset. But finding the flaw and fixing the flaw could take a long time in terms of the kind of expertise that you may need to acquire to be able to do it. Just because you have to get used to working inside your own mental environment. It doesn't have to be hard. It really doesn't. And there are things that we're going to talk about and techniques that I'm going to give you that make it as easy as possible. Most of it just has to do with your willingness. Most of the reason why people are even willing to come to a workshop like this is because of the extreme frustration that they experience between that reality gap that I mentioned a little while ago. That reality gap of, I know these unlimited riches are available. They're possible. They're here. I smell it. I taste it. So I'm so close to it most of the time. But I still can't get it, I still can't bridge that gap between what I know is there and the reality of the bottom line of my statement. So I am assuming that's why you're here. Did I assume correctly? Everyone's here for the same reason then, right? Okay. So if you've got questions, I want you to ask those questions. If you've got comments, I want you to make the comments. There's just one thing that I ask of you, and that if I'm on a roll delivering material, just wait until I'm done and then ask the question. Because a lot of times, once I get on a roll delivering material, and if you break my train of thought, and sometimes it's really difficult to get back to where it was. And the other thing too is that when we take breaks, let's break. Okay, let's take a break. Don't ask me your question on the break. One, because we're taking a break because I need the break. Number one. Okay. Number two, most of the time, people ask the best questions during lunches and during breaks. They make the best comments during lunches and during breaks. And so what I wish that you do is save it and share it with the rest of the group and share it with the people who are going to be watching this video. Because I'm sure that we've got, a relatively good cross section of people, and your questions are probably going to be the same kind of questions that people, are going to be asking about how to get through this material and how to understand it. And so not only will you be doing yourself a favor, but you'll be doing them a favor too. Go ahead. Well, I can't see your name.
John Dack.
John, you don't have to give me, that's all right. Okay, John, go ahead.
We find in going through this process that people will get an aha moments of where that period is, that within that trading mentality, within that movement, that can track back to outside of the trading environment.
I'm not sure if I know what you mean by outside of a trading environment. What do you mean?
Right.
Oh, absolutely,
And
sure.
when aha moment comes, we'll go back and go see those same symptoms and other dynamics.
Yes. As a matter of fact, that's what you're going to find anyway. You're going to find that when it comes to creating consistency, it really has to do with how you live your life. It has virtually, I haven't met anybody yet, and I'm not saying this kind of a person doesn't exist. I've met people who are close to it. I don't know, I can't tell you how many traders I've actually worked with as a trading coach, and I started doing this in 1982. And back then, I was mostly working with floor traders in Chicago. I was hired by clearing firms to work with their floor traders. I mean, these are guys that traded in the in the grain pits and the T-bond pits and in the S&P pits and the meat pits at the Chicago Board of Trade, Chicago Mercantile Exchange. They trade for their own accounts. And what would happen, especially back in the 80s when things were a lot looser back then, it's not like what it is today. Well, a lot of these clearing firms were like families. And since these guys were trading their own accounts, if they went debit, the people that own the clearing firms would usually carry them. So they'd let them carry a $50,000 or $100,000 debit. And, the guy would work the debit off and, he might get profitable and then go debit again. And that's basically the way the cycle ran until, I kind of came along and, they found out about me and they hired me to help these guys, work their way out of their debits and to stay out of their debits. And that way everyone was benefited because not only the trader, but the clearing firm, theoretically had less risk. So I've worked with a lot of traders. I have yet to really meet somebody who had the kind of, let's say, mind that was so compartmentalized, that was so divided that under, let's say, probably the psychiatric industry would call like maybe a true schizophrenic, where they were so compartmentalized that what they did in their personal life didn't affect their trading. Did you get what I just said? That what they did in their personal life did not affect their trading. And it always astounded me, as a matter of fact. What really astounded me was how many traders didn't think that there was a connection. I mean, it was it just amazed me, working with these guys who would literally, walk out the front door, be screaming at their wife and their kids, kick the dog, go down to the pit and have their worst day, in a year or whatever. It's just, and they didn't make the connection, it was bizarre. To me, it was so obvious that, but it wasn't to them. And that's one of the things I help them do is make that kind of connection. So a lot of what you're going to find that it takes to just create consistency is developing an increased awareness of what you're thinking in any given moment. And having a way to gauge your state of mind. My nose is itchy. Having a way to gauge your state of mind so that if you're in the best state of mind to be trading in any given moment or any given day or any given hour. Because if you had a way to gauge that, and let's say you weren't addicted to trading in ways that would prevent you from not trading, put it that way, not trading, because in many cases you're going to find that not trading is like putting money in the bank. Literally. Let's say this again. Not trading is like putting money in the bank, because there will be times that you will be in a state of mind that I could virtually guarantee that no matter what your system, no matter what your methodology says, no matter what your system says, it won't make any difference. You will lose money. You can recognize these kinds of states of mind in advance. And that's one of the things you're going to learn how to do this weekend. Well, at least I'm going to give you the tools to learn how to do it. And like I said, if you're not addicted to trading in ways that would prevent you from not trading, then what you do is just not trade. And you're making money. You're not trading and you're making money.
That's one of the problems also, over trading. There's no action, of course.
Yeah, exactly. Right. Did everybody hear? Did you guys hear that on the tape? That was one of the problems with overtrading, where there's no action, you're trying to force a trade. See, there are, and I'm sorry, I can't see your name. You don't have your John, another John? Okay. Yeah, John. See, there is a way that you can learn to recognize when you're forcing a trade. Instead of after the fact, you can learn to recognize it before the fact. But the problem again is that there may be, if you're, let's say, if you have a tendency to overtrade, your tendency to overtrade may have something to do with some other aspect of your life that really doesn't have anything to do with trading at all. And so when I made the comment earlier about what consistency really consists of, I mean, there's these underlying principles that you're going to have to integrate into your mind so that you can create those kind of consistent results. But in essence, it really boils down to how you live your life. And what the interesting part about all this is the great part, okay? Not the great part. The interesting part is that you don't have to, all this stuff that we're going to learn in the next 2.5 days, all this stuff that we're going to go through, you don't have to know any of it to put on a winning trade. Do you? Absolutely none of it. None. Zero. You can make all the mistakes in the world from, let's say, from the things that we're going to learn and talk about, we would categorize as a mistake. And you know what? You can do it and it can still turn out to be a winning trade, right? That's the problem. See, the problem is, and that's the problem with doing this work, is that this work can be difficult. And you're just always one trade away, one winning trade away of convincing yourself that you don't have to do it. That's right. That's right. You can be making every mistake in the book and still be winning. You don't have to know anything about yourself. You don't have to know anything even about the markets to put on a winning trade. I've worked with many traders who started their trading career, and when I say they knew nothing, I literally mean they knew nothing. It just so happened that the first trade they put on was a winner. They said, okay, I'm going to buy. And it went up. And they had, like, I've seen streaks of 15, 16 winning trades in a row from people who knew nothing. Now, you can put on one trade and not know anything. You can put on two, you can put on three, but eventually the streak's going to end. And we know that it's going to end. Is because eventually what's going to happen is that person's going to make an error. Generally, it's going to be a money management error, meaning that if I'm on a winning streak, I'm going to get to the point where I think I'm invincible. And as a result, instead of trading, let's say 1,000 shares, well, next time I decide to trade, I'll put on 10,000 shares. And now if the market just even goes against me a little bit, a tiny, tiny bit, you know, I can go and stay into a state of mind freeze, which is something I've never experienced, right? And all of a sudden, whack, you know, wham, I'm just like, I'm totally paralyzed because this is just something I didn't anticipate or expect, and then lose a ton of money. And then say, well, okay, well, gee, if I could make money and I didn't know anything, just think about, well, if I learned something about the market, how much money I can make. And so I start buying books, I start buying trading systems, start going to seminars, trying to learn all about the market. In essence, trying to learn about the market in a way that would keep that from happening again, when it never had anything to do with the market in the first place, ever. And that's what's really frustrating about all this, is that's why you see people who are absolutely wonderful analysts that can literally call market moves with uncanny accuracy. but make the absolute worst traders imaginable. So that was kind of just the beginning housekeeping stuff. Okay, just that I want to encourage you guys to ask questions, because your questions are going to shape this experience. It really is. It's your questions and comments that are going to shape this. And I, like I said, we've got a ton of material to get through. I've got this organized, or let's say structured in a way where we will get through all the material no matter what. That's why I usually start on a Friday night and go for 2.5 or 3 hours just to make sure, because sometimes it can get a little tight on Sunday afternoons if I didn't do the Friday night thing. And again, depending on how many questions people have and how much they participate. But I do encourage it. But like I said, if I'm on a roll and you want to just wait till after that's over with, that I would appreciate. So anybody have any questions right now? We're all set? Okay. So basically what I've kind of done is boiled trading down. By the way, guys, can I walk back there? Can I walk?
Yes,
Okay. How far can I walk? You tell me.
you're still good.
Tell me.
That doesn't look that great.
No? Okay. So
No, that's good.
about right here, right?
Well, when you get in front of the projector, it's not the great.
Okay. Right about from here to here then?
Yeah.
Okay.
You can keep going to the right as far as you want.
Oh, okay, good. Like about right here.
Yeah, you're left.
Okay.
Yeah.
Thank you. Yeah, see, the other thing about the other room is that I wouldn't have these bright lights in my eyes because they had a higher ceiling, but I wanted you guys to have these good chairs. I really did. Yeah, it really does. It makes a huge difference. So I just, I thought, okay, I'll put up with the lights. They get the chairs because they won't move the chairs. I mean, these chairs belong in this room. That's it. Okay. And all the hotels are like that. We run this kind of crap all the time. Anyway, so okay, so pretty much I boiled or kind of distilled trading down into 4 general skill sets that you have to acquire to be a consistently successful trader. First of all, you have to know how to identify an edge, don't you? Go ahead, John.
Where we're starting here is a page in the book where we're starting off.
Yeah, I'm in the introduction right now, and I will follow, the presentation will follow. We just put this up there so they could, we're not here yet, okay? So don't worry about that. However, I don't know if we should take a few minutes or not, even before I get going. Do you guys want to do that? There's only 13 questions on that attitude survey. You guys want to take about 5 minutes to do that? Just right in the beginning, right in the beginning of the book, introduction. Introduction. Yeah. Yeah, attitude survey, right. Oh, second section. Sorry. New workbook. Okay, so what I've done is basically I've broken it down into 4 general categories of skill sets. The first is learning to identify an edge. And that's the easiest part of this whole process of becoming a consistently successful trader, and therefore the one that most people gravitate towards. Meaning they'll spend most of their time learning how to do that, as opposed to the next skill set, which is probably the most important, if not the most important, and that's learning how to think in the market's perspective, or learning how to think in probabilities. And I would say that there isn't anyone in this room that doesn't understand the nature of probabilities. And I've worked with people who have who've even majored or have degrees in probabilities in college, from college, and yet they still don't know how to think in probabilities. Because when you can think in probabilities, you will automatically stop making the kind of errors that will detract from your ability to be consistent. In other words, when you've effectively learned how to think in probabilities, it won't even occur to you not to predefine your risk. It won't occur to you not to cut your losses. It won't occur to you to even hesitate when your edge roll, whatever you define or whatever criteria you use to define an edge, shows up in the market. It won't even occur to you to jump the gun. It won't occur to you not to take profits or have a systematic way of taking profits. These things just will not happen Because when you have effectively integrated into your mindset this ability to think in probabilities, it is completely inconsistent to do these things with this thinking methodology. The two are completely inconsistent with each other. This mindset won't let you behave that way. That's basically where we're going to get to in this workshop. But there are other problems. There are other areas. The other area, the next area, so we've got defining an edge, learning how to think in the market's perspective. And then the third one is learning how to identify and neutralize self-sabotaging beliefs. This is big. Here's the problem. The market represents an unlimited, literally unlimited opportunity to enrich ourselves. We all see it. It's there. It really is unlimited. Maybe there are some practical limitations, but for the most part, it's pretty unlimited. But that doesn't mean that the kind of things that we've accumulated, meaning the kind of beliefs that we've accumulated throughout our lives that exist in our mental environment, are in complete harmony with our desire to create consistent results, or to tap into, let's say, that unlimited ability to enrich ourselves. In other words, not everything that we've learned would argue for increase or vast riches or prosperity. Not only would it not argue for, it might argue completely against. These are things that we might be conscious of. In many cases, they are beliefs that we are not conscious of at all. But what we're going to learn tomorrow is that just because we're not conscious of something that we've learned at some point in our lives, it doesn't mean that it's not operational. It doesn't mean that it still doesn't have an effect on the way we perceive information and how we behave. And this, this is the area, learning to identify and neutralize self-sabotaging beliefs is an area that can take quite a bit of time to master. Can take quite a bit of expertise, as a matter of fact. Now, you might be saying to yourself, does that mean that what you're saying to me is that I really have to, kind of tear apart my identity or personality to be a consistently successful trader? No, you do not. You don't have to go through that process. But if you choose not to go through that process, then you're going to have to do something to compensate for it. You can create consistency without having to go through and identify every belief that might argue against increased prosperity or being, accumulating more and more money as a trader, put it that way. But if you don't, and these kind of beliefs do exist, you will have to adopt a trading regimen that compensates. And we'll talk more about that later on Sunday. Are you guys kind of with me on this stuff? Okay. And then the next area, the fourth area, is euphoria. Euphoria is big. Euphoria is big. Now, just briefly, euphoria. Euphoria, let's say, is we know there's probably many ways that we can describe euphoria. The easiest way for me to describe it would be it's a riskless state of mind. So think about that. It is a state of mind in which we have no ability to perceive risk. Okay? In a state of euphoria, nothing can go wrong as far as we're concerned. Nothing. Now think about the implications of that word. Nothing can go wrong. Nothing. However, we all know the market may not agree with that. What? Yeah. And the problem is that when you're in a state of euphoria, certainly it's the least likely, it's virtually impossible to set any limitations on your behavior. everyone seems, at least from my experience, everyone seems to have a different threshold for entering into that state of euphoria. And there is a threshold there. It's like there's definitely a difference between confidence and euphoria. Okay, there's a threshold. Well, what's that? Confidence. See, oh, what? Yeah, that spelled it right, didn't it?
Yeah, it's, I heard something.
I'm not a good speller, so you can get me on this real easily. Anyway, there's definitely a threshold. I've worked with traders who can flip into a state of euphoria on first winning trade. Really, for most people, it takes more than just one winning trade. However, like I said, once you flip into that state of mind, and it is chemically based. I mean, scientists have found that the chemicals that are in our brain when we're in a state of euphoria are very different than the kind of endorphins that are, well, not different. It's just that you've got an increased level of endorphins, I guess, that are flowing through your brain that cause you not to be able to perceive risk. And so what you're going to have to do again is develop or institute a trading regimen that compensates for this, meaning that you have to be able to recognize when you have flipped into a state of euphoria, and then what's even more important, be able to stop trading. Stop trading. I don't know of any other way to handle it. I really don't. After all these years of doing this and thinking about it, I mean, euphoria is a great place to be. There isn't any other state of mind that would be, let's say, that would be better than being in a state of euphoria. You just don't want to necessarily be in a state of euphoria while you're trading. Because the tendency would be to overtrade. It would be almost impossible to keep yourself from putting on a much larger position than what your money management, let's say, whatever money management guidelines you use, or whatever money management guidelines would call for in your particular situation. And if you do, and then of course, as your size increases, then the market just, the amount of distance the market has to move against you to cause you to flip in from euphoria into complete terror or mind freeze is just very tiny. So you go from heaven to virtual in a state of mind that's heaven to hell in one instance, just by having the market move a few ticks against you. And the problem is that this can create an enormous amount of psychological damage that's really hard to recover from. It's extremely difficult to recover from this. Not that it can't be done, but see, the way most people look at this is like a supreme betrayal. It goes into a category in their mind where they were betrayed. And some people would even say that they were betrayed by God, or even think that. It's very possible for people to think that. It can really be damaging. So you kind of all looking at me like, okay, what do we do now? So I'm going to give you a framework to be able to recognize this. And when you think about this, if your objective, if what you're saying to yourself or me or whatever by being here is that my objective is to create consistent results, that depending on how strong that desire really is, will in essence be part of the tools that you will use to be able to recognize when you have actually flipped into that state of euphoria and say to yourself, you know what, I'm going to enjoy myself and the money that I've made getting there some other way other than trading. I'm going to stay in that state of mind, but I'm just going to be doing it with my friends or my family or my kids or whatever. Or maybe you guys are all looking at me like, you know really what I'm talking about here. So what we're going to focus on in this workshop is we're going to focus on those last three skill sets. Okay, the question is there a psychological profile that would suggest that you shouldn't be a trader? Well, when you say psychological profile, I guess you're going to have to be more specific. Do you mean personality types? Yeah. See, the problem with me answering that particular question is that I've never looked at personality types as being relevant. I don't see. To me, personality. When psychologists categorize people in personality types, to me, it was like what they're doing is just making their job easier. They kind of pigeonhole people and into certain categories, so that they don't really have to think about what it is that they need to do to help this person. So I've never really categorized anything in personality types at all. I categorize everything in terms of what people believe. Because of the way that I think and the way I've developed this material, what we believe determines how we perceive information and how we behave, the decisions we make, how we feel about the results. And it doesn't really matter what kind of personality type that psychologists would say that you have anyway. But are there people, for example, maybe to answer your question, are there people that I've met that seem to be more predisposed to being successful as opposed to, say, people that I've met that are predisposed to not being successful? Sure. People who are really rigid in their thinking, really black and white, they just have difficulty in terms of flexibility, are, let's say, predisposed to not being able to think in probabilities very well. When people who are, let's say, predisposed to make money are those people who don't give a shit about money. In other words, some of the best floor traders that I've ever worked with are floor traders that it's just a game. The money is virtually irrelevant. And so when they put on trades and they put on the kind of size that they're putting on, it isn't, they don't think about it, let's say, the way that a normal person thinks about it. What's that? That's right. I was going to say that. And they love it. Yes, absolutely. Because when you really get right down to it, you really got to love this. You really have to love it. People who are also predisposed to being successful are people who genuinely enjoy this. And enjoy it in a way where they're not necessarily addicted to it. There's a difference. Because when we talk about addictions, what we're really saying is that whenever we're operating out of an addiction, we're operating out of a state of choicelessness. All addictions create choicelessness, not choice, but choicelessness. All addictions, when we're operating out of an addiction, we're operating out of choicelessness. In other words, the addiction will dictate how we see things and how we behave. And as traders, we have to be supremely flexible in terms of what we can do or not do. In other words, we always have to be acting in our own best interest at all times. And addictions will definitely cause us not to act in our own best interest at all times, because we'll have to satisfy the addiction. What we might have to do to be acting in our own best interest could be diametrically opposed to what our addiction says we have to do. That's what I'm saying. And so what's going to win is our addiction. So what we're talking about is really thinking patterns that are, let's say, extremely flexible. They're extremely flexible and not caring about money. And not caring about losing. See, because what we're talking about is developing a carefree state of mind. A carefree state of mind with the kind of psychological resources where we're still at the same time always acting in our own best, always acting in our own best interests. So in other words, can I interact with the market in a way where I don't need to use fear? Think about this. I do not need to use fear to limit my behavior. Because that's the way it is with most traders. They have to use their fear of the market or their fear of what could happen to limit themselves. And that's exactly what we want to eliminate. Is this ideal mindset that we're talking about doesn't have any fear. There's no fear of the market at all, because it's really not the market anyway, it's ourselves. The reason why we fear the market is because we can't trust ourselves. Any fear that we have of the market is just simply a reflection of the fact that we can't trust ourselves. We can't trust ourselves to do what we need to do when we need to do it without hesitation and without reservation or internal conflict or argument. Does that make sense to everybody? Okay, so I said before, we got those four broad skill sets. And so what we're going to do is we're going to focus in on the last three. Learning how to think in probabilities, learning how to identify and neutralize self-sabotaging beliefs, and setting up a regimen so that you can recognize when you flipped into a state of euphoria. Now, and we're going to do this all within the context of the three developmental stages of a trader: trading mechanically, trading subjectively, and trading intuitively. So what I'm going to do is I'm going to take all this information that we're going to go through tonight, all day tomorrow, and then part of the afternoon on Sunday, part of the morning on Sunday, and I'm going to put it all within this context. I'm going to put it all together within this context of trading mechanically, subjective, and intuitively. And the reason why I do it this way is because, again, I don't have a profile of people who attend this workshop, and I've gotten people who are novices all the way to people. The biggest trader I had was somebody that had $1 billion under management. And so, you know, everyone's at different levels of development in terms of what they need. And so there may be traders, you know, there may be people in this room that are, let's say, you know, at a point where they can trade subjectively and are now, you know, getting, you know, say a high volume of intuitive impulses about the nature of what the market's going to do. And so what I do is give you these skill sets for each one of these levels of development, or these skills within each of those levels of development. Chances are, however, if you haven't completely learned how to think in probabilities, you're going to end up in the mechanical stage of trading, regardless of how many years you've been doing this. And the reason why is because I'm going to teach you how to use the mechanical stage of trading to actually integrate all the principles of what it means to think in probabilities into your mental environment in a way where it becomes who you are, so that you no longer can make any trading errors. Where it virtually becomes impossible to make a trading error. And I really mean it. It becomes impossible to make a trading error. It's just not part of your identity, not part of who you are.
So it's very ultimate.
What's that?
And mechanical sustain you.
I mean, financially? Oh.
Being successful.
Oh,
You're implying that mechanical set of rules says that you so successful while you find
no, I'm not necessarily. No, I'm not saying that you're trying to accomplish. I'm not saying that you have to try to do anything in terms of subjectively or intuitively. All I'm saying is that I will teach you how to use the mechanical stage of trading to integrate all the trading skills, mental skills that you need so that you can become consistent, whether it's trading mechanically, subjective, or intuitively. I'm just saying we're going to look at trading in a very different way We're going to look at trading in a way like, how am I going to use my trading and what I've learned about how to identify an edge to actually create certain skills inside my mental environment? That's what I'm saying. And then once those skills, once those skills are set, then you can do anything you want. You want to trade subjectively and you want to trade intuitively, then then you can do that. But there are some constraints there, because remember when I said if you don't want to get into identifying and neutralizing self-sabotaging beliefs? Well, when you start trading subjectively, a lot of those things start making a lot of money. A lot of those beliefs, if they exist, will start working on the way you see the market and how you behave. And therefore, one of the compensating factors is to go back and trade mechanically. And I'll explain all that tomorrow. That'll be. What does it mean to think in probabilities? To really learn or understand what it means to think in probabilities, we really have to get at the very core or the very foundation of what makes prices move. This is really critical. And what amazes me is how many times, I've over the years, I've done these kind of presentations, especially in huge conferences, where people have traded and they've been trading for a long time and they really don't understand what makes prices move. At the very fundamental reasons why prices go from one price to another. And it's of paramount importance. Not only, like I said, as a foundation for learning how to think in probabilities, but also for learning how to read the markets. So for an example, if we've got 12, 11, 10, 9, 08, and the last price was 10, what does that mean, first of all? When the last price is 10, what does exactly that mean? Yeah, that's fair value, right? In other words, it's what someone's willing to pay and what someone's willing to sell for and what someone's willing to buy for. Now, if you look at trading, when anybody puts on the trade, no matter what kind of trade it is, there are only two outcomes to every trade, are there not? Right? I need you guys to nod your head, okay? At least tell me that you're with me on this, okay? There's only two outcomes to every trade. What is it? What are those two outcomes? There's going to be a winner or a loser. So every trade that we put on has only two possible outcomes. Well, it could be break. I mean, but how long is it going to stay break even? No, that's not what I'm saying. Saying you could put on a trade at 10, and how long is the market going to stay at 10? Okay, that's what I'm getting at. And all I'm saying is that yes, you can scratch trades, but look, as of yet, I have not met somebody. Well, let's put it this way: and everyone trades. We only got two outcomes to every trade, and everyone trades for the exact same reason. And what is that reason? To make money, right? And I have yet to meet somebody that actually consciously put on a trade before they put it on, thinking it was going to be a loser. I have not met that person yet. Now, I'm not saying subconsciously they didn't hope that it was a loser for some reason or another, but at least consciously, everyone trades for the exact same reason. Now, so we've got everyone trading for the exact same reason. We've only got two outcomes to every trade that you put on. It's either going to be a winner or a loser, and there are only two ways to make money. You have to buy something low and sell it back at a higher price, or sell something high and buy it back at a lower price. Those are the only two ways that you can make money. Now, if that's the case, and the last price of something was 10, where everyone agreed, at least in that moment, two traders or more agreed on the value of something, what is going to cause the price to go to 11 or down to 9? Okay, you're saying imbalance, that is correct. That's right. Okay, that is absolutely correct. But let's be a little bit more detailed here. Well, okay, you could. I'm not going to argue with that, but that's not the answer I'm looking for.
What buyers and sellers?
That's not the argument. That's not the answer I'm looking for either. Perceived value, yes. Okay, that's close. That's what?
Chat with Traders, episode 65.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics?
You guys hear me?
Yep, we hear you.
Okay. Okay. That series is probably one of the more powerful series that I watched. I guess, early last year, because it seemed to me like I had a fairly decent understanding of the markets. I had a fairly decent understanding of the moves or what candles meant. I wasn't trading smart money at that time, but I was trading price action and market structure, which always works. But for whatever reason, either I would scare myself out of the trade, or I couldn't hold the trade for long enough, or I would get stopped out of the trade, and then the trade would head, my direction. When you start having those things happen to you, it really, it kind of messes with your mentality. Maybe this isn't for you. Maybe you can't do it. Maybe you don't see it. And all that is a lie. If you couldn't see it, and if you didn't know it, you wouldn't be in the trade. You wouldn't be interested in the trade in the first place. You would just take setups that other people point out. When you get to the point as a trader, and you're able to pick your own setups, believe it or not, you pick them for a reason. And 9 times out of 10, if you've done no work on your psyche, and you've done no, mind game work, you may not be consciously aware of why you picked that trade setup. But when you start breaking it down, you pick that trade because you have an edge, right? That's your edge. You've identified an edge. Now you have to get to a point where you can articulate that edge to yourself, or you can articulate that edge to someone else. Why did you pick that setup? Why do you like that setup? Because I win trades at that setup. It's deeper than that. It's not because you win trades, but you win trades because you've identified an edge that you have over the market when you see that setup. Like double tops. When you trade double tops, you've had some success with double tops. Maybe your edge is, hey, once it taps twice, there's a high probability that it drops, right? And that's the second point that he was making about high probability setups. But for whatever reason, you identify that edge. And even if you didn't look at it and write it down yourself, and this is the important thing about having a trading log or diary, of your trades and how you feel, because you can go back later and you can look at things and you can identify things that maybe helped you or hurt you. We did this 5K challenge this week, and I replayed some things in my mind because while I personally had success, the group didn't have the type of success that I would have liked for the group to have. First of all, we traded a news-packed week, and that was intentional, maybe a little ego-driven, because I feel like I'm that good or whatever, right? But that's really neither here nor there, or maybe it's just a testing ground, that I wanted to go through. It kind of challenges me and to see if I know what I think I know. But during that experiment, I I noticed a few things, about myself that I need to go back and address, and there was a trade setup that I saw yesterday morning that I did not take, that I should have taken, that I would have taken if I was by myself, that I did not take because I was with a group. And it cost me $18,000. So, just thinking back, over the conversation and what happened, during that trade, and why I didn't take the trade. It's something that I needed to address, or something that even Mark Douglas talked about identifying the self-sabotaging beliefs and all that good stuff, right? So when the first news came out that we traded last week, and for the people who are on the live with me, maybe they remember when I took an 18.0 lot size and I won that trade. It didn't go as far south as I would have liked for it to go. But I think it went about 30 pips. I ended up making about 4,500 bucks. I don't know how many pips that is, but it was enough to make 4,500. Do you guys remember that? Who was on the trade with me?
Yeah, we remember. I remember. It was
Okay.
doing the US 30 call right before or after.
Okay, and we talked about the setup, and I knew where to place my trade. Like I knew where my edge was. So I identified that edge. It was a high probability that they were going to run the liquidity. All of that stuff worked out. Everything that Mark Douglas was talking about psychologically, it all worked out. I was supremely confident that the trade was going to play out, and it did, right? I was in the trade. It whipsawed back and forth. It didn't bother me. I actually went to sleep while it was playing out. Somebody else in the group took the trade also, but they didn't hold the trade, right? And I later found out that they were trading in their funded or their challenge account or whatever, right? Not the demo. So subconsciously, I think that bothered me. So when we got to the next news event the next day, we talked about it. The setup presented itself. I identified the area that I would have put my trade in, but then I said, I'm not going to put this trade in. I said that out loud. Do you guys remember that?
Yes, I do.
Why did I say that? It's because I didn't want the pressure of that person trading that funded account. Even though I knew that that was our edge as a trader, I knew that it was a high probability that liquidity was going to be ran right where I said it was going to be ran. And it's just because I've done this so many times and I've looked at it so many times that I understood the price action. I looked at the price action and I didn't take the setup. And you guys didn't take the setup. But if I had said it, maybe some of you would have taken the setup. That trade went 115 pips to the downside. If I took that same setup for just 100 pips, that's 18 grand. And if you guys had took that same setup for 100 pips, the outcome would have been different. But because of the rattled psyche that I was in, I didn't take the trade. I also forgot to say, take off your stop loss at the bottom or protect yourself after the stop loss is off. Both out of character because of the high pressure environment that I was in. Like when you trade live or with other people, or you consider that other people may be taking your ideas with real money, it kind of intensifies the situation. So I say all that to say, when you guys are trading, you probably experience some similarities. Even even though you might not be doing it with somebody else, it might just be in your own mind. Hey man, I'm trading. I only have so much money to lose. That intensifies the environment, and it clouds your mind because of the fear and the uncertainty. Every trade that we put on has a chance of losing. But if we break it down to the nth degree, the reason why we selected that trade 9 times out of 10 is because we've identified our edge of the market. And there's a high probability, according to what we know as traders, that this trade is going to play out, right? It's not to say that we won't lose a trade, because we will lose a trade. But a lot of times, if we just take the trade that we've identified that has a high probability of winning, we're going to win that trade. We're not going to lose that trade. But we let our little inside voice, or our devil, whatever you want to call it, we let them talk us off the ledge, right? So we're not in a good mind state to actually be winners. And I guarantee you, if you log your trades, you can probably go back through the list, and I would probably say 80% of the losers on your list are going to be because of one of these issues, right? We didn't even talk about euphoria yet. You know, euphoria will happen after a big win most of the time. And that's why most people will tell you, hey man, after a big win, don't even trade, right? I would like to think that I'm at a level where I can still trade after a big win, you know, because I don't look at it like that. But I've done a lot of work that most people probably haven't done. You know, the people who know me know I went on a chicken breast and broccoli diet, no starches. I didn't eat out. I didn't have sex. I didn't watch Netflix. I did extreme things to get myself to a place where I could find success on a regular basis. I did what worked for me. You know, I don't know what will work for you, but you know, if you're not willing to go through the work, then you know your level. You have to temper your level, your expectation for the level of success you're going to find. I'm a firm believer that it's directly correlated. You know, like it's not an accident that I've been trading since August of 2020, and I found a level of success. I can directly attach that to what I put myself through, or what I was willing to give up, the amount of studying that I was able to do. But not only that, the amount of the psychological work that I put myself through, because I was so frustrated with losing that, or really it wasn't just losing. It was, I had figured out a way to win, you know, like by swing trading, but I would still take catastrophic losses, you know, every now and then, or I'd win for a week and I'd lose the next week, or I'd win for 3 days and I'd lose the next 2 days. So I needed to find a way to curb that. And it led me to these psychological videos. And this video in particular paid huge dividends for me, because the 4 things that he talked about, you know, and if you guys go back and watch his series on this, the 4 things that he talked about are the very 4 things that just need tweaking. You know, like you already know how to recognize an edge, because you wouldn't jump into the trade if you didn't. You know how to recognize an edge. So that doesn't need to be fixed. You just need to believe in your edge. You already know that it's high probability, or you wouldn't have identified it as an edge. You know, and I'll give you guys an example here in a minute. The third thing, and probably the thing that really needs to be fixed, is that the self-sabotaging beliefs that this ain't gonna work out for me, or this, man, there's no way to set up come. All of that is a lie. That's the fear talking. And if you can put that fear in a box, or you can put some earmuffs over your ears where you don't listen to that fear, and you will allow the trade setup to play out, Then you'll get to that next step, that euphoria from winning that trade or winning that series of trades. And that's when you can deal with the euphoria. If you never get past step 3, you probably will never get to experience the euphoria of winning a big trade or winning multiple trades, right? So identifying your edge, you know, for those of you who may not know, and I'm just going to kind of explain it from my perspective, right? All right. So as a swing trader, this is a weekly chart, right? I like taking trades at the weekly order block, right? So there's a high, this is my edge, guys. Like, because this gave me a weekly order block, I'm going to believe that the market is going to push up, right? Not only that, you got structure here, structure here. This is higher low than this one. The market is going up. So there's a high probability that this market is going to continue to go up. This whole thing right here can be looked at as a swing low, right? There are multiple confirmations that I'm correct that this market is going to go up because it gave me a swing low, and then I get a weekly order block. Bullish, high probability setup, right? But the only thing that can go wrong is I can set my stop loss too close, or, you know, there could be somebody that blows up German or Britain, and then the value of that currency goes down. But outside of something catastrophic, you're going to win this trade. Like, it's going to happen, right? So understanding that as a trader, you got the first 2 pieces knocked out. Now the only third thing, the only thing that can keep you out of this trade is your own self-sabotaging beliefs. Like, oh man, is it going to retrace far enough? Is it going to, you know, is it too big of an area that I got to cover with my stop loss? None of that makes any difference. Who cares the size area you got to cover? Hedge that sucker. Get you a buy position and a sell position at a low lot size. Be in the trade. Just the goal is to get in this trade because there's a high probability that it's going up. Once you get into the trade, there are 1,000 different ways you can trade it. But if you never enter the trade, you're never going to win. So that's step 3. You got to, I mean, once you identify the setup, this high probability, get in the trade. Don't talk yourself out of the winning trade. Get into the winning trade. And that will help you, you know, as a trader going forward. Now, once you win this trade, then you got to deal with step 4, which is euphoria, right? And the easiest way to deal with euphoria is just stop trading. Like you said, just stop. You know, so if you know you have a problem over trading, and you know you had a big win, whatever your big win is, you know, for you, just shut it down. And if you have to trade, if trading is an addiction for you, it's probably going to be a problem altogether. But there's still ways to combat that too. Get in the demo account, delete your MT4. Maybe your demo is on an MT5, use an MT5. Or maybe your real account is on MT5 and you have a problem with trading. Once you win that trade, close it down, delete your MT5 and get on your MT4 demo. There are a number of ways to do this. Do not make the excuse of why you can't do it. Just do it and make the excuse why you can't trade in your real account. You just have to flip-flop. And I know it may sound like I'm oversimplifying what needs to be done, but I'm not. It's just the truth. You know, do what you must do. Do what must be done, and you will become a profitable trader. If you refuse to do what must be done, then of course you have to be satisfied with failing. But once you fed up with failing, then if you take these 4 steps, man, hopefully everybody wrote those 4 steps down, but if you take those 4 steps, your success rate is going to climb. I'm living proof of that, you know. Most of us have winning strategy. Doesn't matter if we trade smart money, dumb money, trend lines, no trend lines, supply and demand, 3-box method, Mint FX, you know, all of it is winning trading, right? I watch podcasts all the time where guys don't know the names of candles. They don't know anything but the patterns or head and shoulders or M's and W's, all of it. You know, I learned to trade from a guy who just uses moving averages and a concept that he calls space, the space concept, you know? So it doesn't matter your style. You don't have to be a market aficionado. You don't have to know all the cool terms. You just have to recognize your setups, take the trade, and get out of the trade when you're profitable. Wash, rinse, repeat. Don't self-sabotage. Stop doubting yourself. If you guys haven't done it, man, you need to find a podcast. I can't stress this enough. You have to find a podcast that talks trading, because it's what you do, or it's what you want to do. And if you're not around it, if you don't listen to it, you might not ever get that one tip that you need, that one trick that somebody else has used that may be the trick or the tip that put you over the edge or over the top as a trader. So listen to your podcast while you're cleaning up, you know, while you're doing whatever, washing your car, while you're mowing your grass, washing dishes, whatever the case may be. Listen to your podcast the same way you would listen to your favorite music. Just listen to your podcast. And maybe you'll hear a trader that comes on there, because they just interview traders. That's all they do, interview traders. Talk about what works for them, what doesn't, where they came from, all that good stuff. Pick you a podcast, listen to it, glean information from it. Somebody asked, do I have any suggestions? There's a couple. The Trading Nut podcast is probably my favorite podcast. The Trading Nut. There's one, which Selena, what's that other one we dropped in the chat? I don't have,
Give me a second, I'll find it.
yeah, I don't have my phone with me, but there's another one that I started listening to recently. You know, he's a Christian trader. Some of you guys don't want to hear it, but if you don't want to hear it, that's fine. Trading Nut. A guy doesn't reference, he doesn't use biblical references. So the newer one that I started watching is a Christian trader, and he uses biblical references and you know, that kind of thing. So if that bothers you, you don't necessarily have to use that one. But there are actually 2 or 3. There's a I'll get them to you. I'll drop them in the general chat throughout the week. That way you'll have a decent list of where you can start. And if you guys have podcasts that you listen to that deal with trading, you can also just drop them, you know, at everyone and drop them in the general chat. That'll be the best way to go about it, you know. Do you guys have any questions or any comments? Because I have a question if you guys don't. Do you guys review losses?
Sometimes I do. Like I have a log, but I haven't been consistent with it. So sometimes.
Okay, I appreciate your honesty. Every loss is a teachable moment. I believe that. I review every loss. And it's probably why I was thinking about what happened throughout the week, or really what bothered me was Friday. But I review every loss because, especially when it's a concept that I'm trading, right? Like maybe I've taken a trade, for some other reason, right? And I lose that trade. Maybe it was a revenge trade, maybe whatever. And I understand why I lost that trade. I might not have to necessarily review it. But if I take a trade, and I have the edge and I lose that trade, I'm definitely reviewing that. Maybe I missed something, in fundamentals, or maybe I didn't see a chart play, or something like that. So it's only going to make you better, if you review your losses. And hey, you don't have to, but just understand it's going to stretch out your learning curve. Most people want to be successful quickly, and I don't know that that's possible. I mean, quickly in terms of learning how to trade is probably 2 years, 3 years, maybe a year and a half. But most people, when they learn to trade, it's going to take them 4 or 5 years, because most people can't quit their lives and just learn how to trade. They still have to function. They might have kids, they might have a job, but most people can't just drop everything and learn how to trade. So that time that it takes them to become successful is going to have to stretch out, over, 5 years, over, 7 years sometime, or whatever. It's just like getting a master's or a PhD sometimes, because you have to learn the language. You have to spend time on the charts. You have to go back and back test. You have to learn risk management. You have to, there are so many things that you have to learn to even speak trade, right? And then you have to master yourself. That's probably the hardest part, after you learn the language and all that stuff. There is no indicator for yourself. You can't put on a frustration indicator, a FOMO indicator, but you can teach yourself to be aware of when you're experiencing those things. And that's probably the most powerful thing you can do, is get yourself to a situation where you understand who you are as a person and how you trade, or how you should trade, based on your emotional state, or even if you should trade based on your emotional state. Okay, that podcast.
I dropped it in the chat, Todd.
Okay, yeah, Forex Beginner Podcast. Calvin, Calvin, the new trader. So
I have a question when you're done.
yes, ma'am.
When you're finished, I didn't want to interrupt your thought.
I was really done as far as my spiel on knowing who you are as a trader. I can't overstate that. That's all. I just wanted to stress the importance of knowing yourself, because nobody else really knows you, and we're not going to know you. We're just going to know who you allow us to see. You guys know you know yourselves intimately, and that's going to be the kicker. Your success or failure is going to be based on who you are. Can you make the right adjustments? Go ahead, Naima.
Well, I wanted to know if you or anybody in here could maybe share their trading plan. I've seen different trading plans that people have. And I have I know when to get in. Actually, I know, but I have a general concept of when I want to get in the market, what setups I see, like my stop loss. But I saw somebody's trading plan in another group that I'm in, and it looked like a maze. Like the way that they had it set up, it was very strict. And so you know, where I'm at right now, I just feel like I need to be a little bit more solid. But I wanted to just kind of see, you know, some examples. I know that.
What I'll do is I'll drop my trading plan in the Discord chat. Okay. My trading plan is probably going to be more loose than somebody who's just beginning. You know, for instance, when I first started with my trading plan, I had the instrument and the sessions that I was going to trade. I don't do that anymore. I trade all available instruments in any session that I see a setup. That might not
Yeah,
work.
I'm not there yet.
Well,
I
yeah,
trade one or two.
and there's nothing wrong with that. But
I trade two instruments.
then that's cool. That's cool. I think there are levels, you know, and you have to have an understanding of what you are good at, you know. But I'm somebody who enjoys fundamentals, you know. I didn't always understand fundamentals, so I couldn't trade other instruments, or, you know, like even now, like in my trading plan, for the most part during this war, I don't like to fall asleep with big positions active. You know what I'm saying? So if I fall asleep, it's going to be with a small position and not a huge lot size position. I used to go to sleep with whatever lot size position I had going on, and I never even worried about it. But because of the restrictive nature of trading this Russian invasion, the market is less liquid and it's tighter. You know, it doesn't go as far. It doesn't give you the types of move. It doesn't give me the types of move I used to catch. You know, so that sort of thing you're going to have to make adjustments on. But
I mean, I do want to get into like pairs and swing trading, but I'm good at Nas, and I just feel like God blessed me to see the setups and they're successful. And I'll trade 30, but like I just don't want to do too much. You know,
I don't think you should. I would never tell anybody that they should trade this or they should trade that. You have to trade what you are comfortable with trading, right? With that being said, I mean, you have to understand where you're getting murdered at too. You know, so you can't be getting murdered and keep going back to the well with your real money. If you want to get murdered in your demo while you learn to trade, that's how you're supposed to do it. But if you found a level of success trading an instrument like Nas, trade Nas. I mean, there's nothing wrong with that. You know, I trade Nas every now and then. Most of the time I prefer US 30 because it pays me more than Nas. But it's just a personal preference. You know, there's whenever I
but I mean, I do want to say that I'm grateful for this challenge, like the 5K challenge, so that I can kind of get to know these other pairs, you know, like in a demo account and like see how they move and stuff. Because it's just different to me.
I just think that if it's important as a trader for you to identify where you're successful and what causes you problems. If you can identify those things, you're on your way to being consistently profitable and consistently successful, because you avoid the things that trouble you and you gravitate towards the things that you have success with. Just don't paint yourself into a box before you've actually documented what it is. Not what you think, but what your documents say the problem is. So I'll drop my trading plan. Again, it's my trading plan. It's not yours. It's my trading plan. So you won't find success with my trading plan because it's mine. It's tailored to me. You're going to have to tailor a trading plan to you. You can trade the same setups that I trade, but if you don't execute those setups the same way that I execute them, it's not going to work for you. That's very important. This is a psyche training session. So you have to you have to master yourself. You have to understand your psychology in order for you to first find success, and then second, be able to duplicate the success that you found. Any more
Okay.
questions? Sorry, go ahead.
No, I was just saying thank you.
No problem. Any other questions? All righty. So tomorrow we'll hook back up and we'll go over a little market analysis, maybe at 11 o'clock, same time, same place tomorrow. We'll drop some trade ideas into the group chat. I want to redo 5K challenge. So you can go ahead and make you a new demo. We're not going to use the same demo.